Hey guys, what's up, how's it going? My name is Robin. Welcome back to the channel for another video today. In today's video, I'm going to be going over my Canadian-based dividend portfolio, and I'm going to be showing you guys which stocks I'm going to be buying in today's video for Monday. Alright, so if you guys enjoyed this video, please do me a big favor and smash that like button, and remember to subscribe if you guys want more Canadian-based investing content, and if you guys want to follow alongside with me as I build this dividend portfolio. So let's not waste too much time. Let's jump inside the portfolio in a Wealth Simple Trade, and let's see how our stocks are doing for today. Alright guys, so we're inside the Wealth Simple Trade portfolio, and one thing I want to mention really quickly is normally I would do the updates where I would buy the stocks and show you guys what I'm buying, but unfortunately I did this video earlier and my microphone actually didn't record with the software I'm using, so the audio didn't get picked through, so I had to kind of redo this really quickly. So I'm going to redo this part really quickly, and what I'll do is I'll just show you guys the stocks that I bought and the stock that I'm buying and how much I bought and whatnot. We'll try and do it that way. So I'm sorry about that kind of hiccup there, but hopefully you guys still can kind of get some value, and we'll do a little recap of the portfolio and whatnot as we go through this. So here's the TFSA here, as you guys can see in our Wealth Simple Trade account. Over the past day, the stocks are down -1%, so the stock market kind of opened up a little bit of a low today, but that could change throughout the day, so it's not really anything to worry about. Over the past week, we are down once again -1% because we did get a big jump up previously earlier at the start of January, as you guys can see. If we go the past month, we are currently up $300, which is 2%. So, you know, the year started off really good, and we're starting to get a little bit, you know, go down a little bit, but we'll just have to wait and see. I think a lot of people are predicting that the markets are going to go down a lot this year. I think they're going to go up because 2020 was a really, you know, depending on what you invested into, but most stocks had a fairly bad return. Whenever there's a bad return, things usually recover pretty quickly. So it's going to be interesting to see what happens, but I think it'll be a pretty good year overall. In the past 3 months, our stocks grew 8%, which was pretty sweet, up $1,300 in over the past 3 months. So pretty good growth towards the end of 2020. And hopefully that will continue like I just was talking about into 2021. But otherwise, over the past year, we're up 6%, and all time we're up about once again 6%. It's actually more than that because of the fact that we did move a lot of money inside this account. So really, the returns are probably almost double that. But just because of the fact that, you know, we moved money around inside the account, it looks like it's a little bit lower than it really is. So here's the actual holdings we have inside here, and as you guys can see here, we have a lot of good, solid Canadian companies. Some pretty good solid ones. The main thing that's really down inside our portfolio right now are some of the REITs. As you guys can see, HR REIT is down -9%, which is quite a bit. Otherwise than that, it looks like Shaw Communications is down about 6%, and that's pretty much it. Other than that, in the XRE, which is our REIT we bought kind of at the beginning of this year, been meaning to kind of get rid of it, but it's just kind of, I'm just waiting for it to go back up a little bit. So other than that, like, most of the portfolio is pretty good. Once again, this HR REIT, where is it here, is actually pulling us down quite a bit at the most, and CNR is down a little bit by 4%, and that's about it. So the funny thing about H&R REIT, you know, before when he moved inside the TFSA, it was actually up about 40%. So this is what's really kind of driving that return down. But realistically, we're actually still sitting in a pretty good game for this company. It's just went really down over the past little while, but I think the REIT will recover as time goes on. So earlier when I did this video, one of the things I wanted to talk about was the ETF allocation for the portfolio. So not VMI. So let's go to VFE, which is S&P 500. I want to regularly invest into US funds inside this portfolio just for the growth, because, you know, the S&P 500 just, you know, on a yearly basis just does good. Last year in 2020, it get a return of 14%, which is pretty solid overall for an ETF. And over the past 5 years, it got an 81% in total. So that's like about I don't know, would it be about like 12-15% per year, which once again is just pretty solid. So this is a way for me to diversify the portfolio, put in the US stocks, and get that nice growth. So we have about 53 shares, which is $4,000. We're currently up 2.84%, and I want to get this to about 40% of the portfolio. So we currently have about 26%. So earlier today, I bought about 1 share of VFE, which is currently about $86 Canadian. So I went through that, and I'm gonna, once again, like, if you guys watch my videos, you guys know the reason why I'm regularly buying this fund. And kind of every video, every time I buy stocks, I just kind of remember, okay, buy some VFE just so we can slowly grow it inside the portfolio over time. We can get that slow growth and get those dividends that, you know, have grown pretty good inside VFE over the past couple of years. Next up we have for the other ETF that we're focusing on is VDY. This is a Canadian high dividend yield fund, and this holds a lot of the Canadian stocks, and this is where most of our dividend income comes from inside the portfolio. So you have 129 shares, which is $4,000. We're up 6.63% because Canadian stocks have done pretty good over the past year, since, you know, the recovery has been pretty decent. I think Canadian stocks will have a good year in 2021. we'll just have to wait and see. So it's currently about 25% of the portfolio, so I want to bring this up to 30%. So once again, we bought a couple, I think I bought like 2 or 3 shares, I think $100 worth earlier today when I did the video. So once again, we're slowly going to be buying into this one as time goes on. So, once again, I try to buy these ETFs on a regular basis just to make sure we're growing the portfolio, we're getting a wide basket of stocks and whatnot. And then usually what I'll do is I'll buy some individual stock as time goes on. And the one I wanted to pick up today was Sverige Corp. And the reason why is because I wanted to kind of bring some balance inside the portfolio. If you guys look at the portfolio, like if we go back here, you'll see that I have a lot of shares of some stocks and then not very many shares of other ones. So I kind of want to like bring up some of the lower holdings to kind of just, bring everything up to be close to the same. Obviously, like some stocks like TD, that I really, really like, I'm probably going to have a lot more in terms of holdings because I think like this stock is going to do a lot better and it's just like one of my most favorite stocks. But I kind of want to bring up some of these lower holdings a little bit. So as you guys can see, we only have 11 shares, which is about $170. So earlier today, I went through and I bought about 3 or 4 shares of Sverige Corp to kind of just add it up. But the company's been doing pretty good. It's up 20% over the past year since the pandemic. And obviously with the pandemic and everything, healthcare stocks have done really well. People have, businesses that have been focusing on things like accessibility, elderly care, and all that stuff have done really well because that's what people are focusing on. Like they think that's going to be the future kind of thing. So this stock's done really well, and even over the past 5 years, it's up 221%, which is really good. So really good growth over the past little while, and they do have a monthly dividend, which is currently sitting about. I'm just going to look it up here really quickly. Sverige stock on Google, we can see it's got a dividend of about 2.97. So it's actually a pretty good dividend stock, and it does pay monthly, which is really nice as well. So I'm not going to go too crazy with it, but I do think this is a nice little one to keep. I'm going to keep slowly investing into as time goes on. It's performed really well, and it looks like it's doing pretty good. And I don't have a lot of healthcare inside the portfolio, so it's nice to own that type of stock. So once again, 11 shares, $176. Bought a couple shares, and it's now 1% of the portfolio, up 10.53%, which is pretty good. But because it's such a small amount, it's only up $16. So that's the main stock I bought today was Sverige Corp. But like I say, guys, when it comes to these videos, any of these stocks, any of these super good quality stocks you could buy, obviously ones like that have been doing well than others are like Enbridge has really kicked up over the past little while, so Enbridge might be one to look at. It's still trading down quite a bit. If you go over the past year, it's still down 18%. Over the past 5 years, it's still down 6%. So anybody who's been holding Enbridge and buying into it on a regular basis probably got a nice little gain over the past little while. So that might be one you guys want to look at. They did recently increase their dividend as well. If you're feeling a little bit risky, you might go for H&R REIT. Like I said, this one's down quite a bit. Over the past year, down 42%, and over the past 5 years, because of that big dip in 2020, it's still down quite a bit. If you think REITs are going to recover, this might be one to look at, take a peek at. And I'm kind of thinking that it's going to do well too. That's why I kind of have so much in it. Manulife has done pretty good with me, still growing up 11%. RioCan is another REIT. I think it's a little bit more safer than H&R REIT because it is a bigger REIT and it's just more established, more bigger market cap and whatnot. And it's not hit as hard, but there's still tons of room for recovery. Currently down 36%. Still lots of recovery for RioCan, and over the past 5 years, once again, we can see it's just a big drop and still down quite a bit. So it might be a good stock to buy. It does have a nice monthly dividend. Did get cut recently, but still has like a 6% yield, which is still pretty good. So I think that's a good one to buy. Going down here, other than that, there's the TELUS's, the TDs and all that are always good buys. TELUS is up 6%, TD up 8%, and that's pretty much it. So that's pretty much stocks I'm buying for today's video. I hope you guys enjoyed this quick little analysis. And before we end the video, I'm going to go inside my dividend spreadsheet so you guys can see how the portfolio has been performing. I like to do this just to give anybody who's new to the channel, or if you guys just want a quick little recap, and I like to look at these numbers just to see how my stocks have been performing. So it's pretty simple here. As you guys can see in the left column, we have the monthly, the month in which we're talking about here. So we started the portfolio in January 2020, and it's been 13 months. We've been regularly investing. Here we get the dividends earned. So as you guys can see in the beginning, it wasn't much, but it really picked up here kind of towards the first quarter to middle quarter when we started putting more money in. And then those dividends are getting reinvested and growing on a regular basis. And as you guys can see, we're currently at $32 for January, hoping to get to maybe 60. It's the 25th right now, but we have some big dividend stocks paying towards the end of January. So hopefully that'll pick that up, and it's just growing on a monthly basis, you know. Kind of keeps growing. Total dividends for the portfolio is $301, and monthly income is currently sitting about $50, maybe $60, depending on the month. And going down here, we have the spreadsheet where I keep track of, you know, one of the things I wanted to do to, you know, do a cool little case study was, and I got a video coming out over the next couple of days talking about this in further detail, was, you know, how can I, you know, make use of just, even if it's just like earning an extra $30 or $50 a month to make my life easier, to you know, be inspired to keep going, and to just, instead of like chasing, you know, people when they invest in the stock market, they want to make millions and millions of dollars. To me, it's just about, you know, what can I do to maybe work less in the future, make some extra income, give myself a raise every year, etc., etc., however you want to put it, kind of thing. But just appreciate the fact that my money is working for me. And, you know, it was, you know, a bunch of little simple things here, but the goal is in 2021 to really just see how much can I live off my dividends, and show you guys, you know, even just a little bit of money, like $50 a month, compounding over a long period of time can really make a big difference, especially for the necessities that I think a lot of us really do take for granted. So I got a big video coming out in the next couple of days talking about that, so stay tuned for that. But other than that, guys, I hope you guys enjoyed this video. Hope you guys enjoyed this quick little update. Like usual, guys, if you guys enjoyed this video, give it a big thumbs up, and let me know what you guys think in the comment section of the video. Take care, have yourself a good day, and I'll see you guys later.